Good news for the housing market in Northern Virginia. According to a George Mason study, the housing market in Northern Virginia has steadied in the past few months due to falling prices and the growth of government jobs. The study also noted that they expect the region's GDP to bounce back to levels seen in 2003 and 2004. And for more on what we can expect in the housing market, from financing to tax credits, we welcome back Craig Strent. He's Vice President at Apex Home Loans. Craig, thanks for joining us tonight.
Thanks very much.
First of all, let's start with some good news for homeowners. Rates have dropped in recent weeks.
They sure have. We've seen some real precipitous drops in the last month, now at the lowest level since April. And we're touching back on 40-year lows that we haven't seen in some time.
So what do you make of this, or what should homeowners make of this? Good time to refinance?
Absolutely. It's a great time to refinance, assuming you can qualify. That's really the catch these days. But for those that can, really any homeowner that does not have a fixed rate below 5% is really in a position right now to take a look at whether or not refinancing makes sense for them.
So let's talk about the government control of the mortgage market for a minute. Now, this essentially means that taxpayers are guaranteeing the large majority of mortgages these days.
That's right. Between the FHA, the VA, Fannie Mae, and Freddie Mac, over 80% of mortgages now are backed by American taxpayers, and that's more than $1.2 trillion investment by the government right now. So the government-backed loans are really the only game in town if you're getting home financing these days.
And is that a good thing for homeowners, or are we more wary of that?
Well, it's a good thing for homeowners in the sense that the government is making mortgage money available, where with the tightening credit it really was not available for a while there, and the government is providing that. It's bad news for American homeowners if some of these loans and some of the looser credit guidelines that the government is allowing for result in these loans going bad and the American taxpayers on the hook.
Which is exactly what happened in the first place.
Certainly. I mean, between a lot of the new, much looser credit guidelines and some tightening by the FHA recently, it's possible that we could see some defaults later on that could be really stomached and taken on by the American taxpayer.
Now, do you recommend that homeowners wait until a lot of these mortgages aren't backed by the government?
Absolutely not. It's a great deal right now to get in on some of these loans, as the government is backing and providing some terrific guidelines to help people who may not have been able to qualify because of drops in their home values and other reasons, helping them to qualify now. So people should be looking at this.
And the first-time home buyer tax credit set to expire soon?
It is set to expire at the end of next month, and a lot of renters are kind of rushing to get in and trying to close before the deadline expires. What we're concerned about is after the deadline expires, perhaps seeing a similar effect that we're seeing for the Cash for Clunkers program, where sales drop a lot as everybody who might have bought anyway actually rushes to buy sooner, and then in the months following that we could see a drop. We're hoping that doesn't happen.